Hello, traders. Hello, everyone. Welcome in the advanced room here at Life Education with XM, and also welcome on YouTube, Facebook, and
Yep.
Instagram, where we are streaming for the next 15 minutes. Hello, everyone. We are going to discuss together the market situation today and this week, and I'm here with Doug Rummer, our stock
You
trading
are.
expert. Hello, Doug. How is it going? How is the week for you?
Hey, it's okay. Finally getting warmed up after my long travel. So yeah, I finally felt good this week. So I'm just a sissy, guys. I just letting you know I was in Europe for a month and just flying back to the United States is I'm too old to travel, dude. you know, yeah, you take a 14-hour haul with a toddler.
Well, I mean,
No, no,
it's a difficult
not
travel
not
because it's
good.
it's from Europe. It was like Bulgaria or Romania, and through the
Yeah.
whole United States to the Nevada. So it's actually quite far away. Um, I'm wondering if that changed your perspective on euro, if that changed your perspective on European assets or US assets looks better to you now after the trip or
It does.
um,
It definitely did. It was eye opening to see how inflation has just like just poisoned the whole entire globe. Like last time when I lived in Germany and Bulgaria, this is like pre-COVID and then through COVID. Um, it was all right. Germany obviously more expensive than Bulgaria, but Bulgaria was value. It was like cheap. Real estate's cheap, apartments cheap. Not anymore, man. They got a hold of them too. It's expensive over there. Gas, I don't know what happened there, but it's like, man, you're at 250 or so leva, which is like, I don't know, dollar 80 euro or some per liter. Like, gracious, you know. Uh, thank goodness your cars are small and get good fuel economy. That's I don't know that would turn out to be like $6 a gallon in the United States, which we're close. We're getting close to. We're above.
Oh yeah, Europe is
But
definitely
yeah,
not at the top of energy food chain right now.
yeah,
All sorts of problems.
yeah.
Probably having gasoline at Euro 80 or Euro 70 in different places is still not bad given the circumstances. Um, Anyways, I'm looking at the U.S. Stock market, U.S. indexes, and I'm hearing that they are bouncing back up. So now I'm seeing like Nasdaq was pretty shy yesterday, like probably too much to not to it is too much to call it a buy.
Still haven't broken a higher high. So like those who are listening, like one of the biggest trend changes is higher highs, higher lows, lower highs. You know what those are. So every pullback needs to be higher than the previous pullback. That's a start. But then you've got to break some sort of high pivot. It still isn't over the rally from yesterday. So you bounced at like 42.80s or something in that area. You rally up to 43. Sorry, I got to squint to see like 43.30s, 43.25s. You still are underneath of that now. So uh, it's pretty straightforward, I guess. If we open up today in the market, you've got to get above this 43.30 and into the 43.50s to have any chance at a rally. Otherwise, it's going to fizzle. And because it was so aggressively sold yesterday, if the market doesn't hold that bounce, I'm shaking my head. I didn't even tell you how ugly it might get. It won't be good. I'll say that. It's you've had a valiant effort here. If they sell this, I don't know what is going to keep this market from getting smoked. So, oh look, we're already pushing extreme fear. That was quick. We got over there
Well, I
already.
recently seen that comment somebody said, "Yeah, we finally there." I mean, it was sounding like people are waiting for fear to get extreme to start buying the dip, right? I mean, because those stock
Wait, but
traders, stock investors are like, okay, buy when the
yeah,
blood is on the streets. Uh,
this is really not blood on the streets, though. It's only like, it's like the Nasdaq was up 40% for the year. It's just dropped 5. It's like that's not panic yet. Like how we instantly got to extreme fear. Like it's like 4 down days and everyone's ready to just like call it quits, right? It's like you go up for 3 months. Like when you think about it, though, it's like the market's gone up all year, like from pretty much 8 months from January to August before you saw any crackage. Like the thing has just been vertical the whole time. Um, it's interesting that we got this extreme fear. Hey, people can't handle sell-offs. It's like 4 days down. It's like that's a correction, right? That's a market correction. It's 4 days
yeah,
down.
it feels like an overstatement a little bit, right? Um,
I thought we were just over there last week at extreme greed. Like we didn't even go to neutral. We just skipped through greed and extreme fear. It's extreme already. Good thing about being a pro trader is that doesn't make, you're always the same. It's just like if my chart would read okay, and the needle would stay there permanently. Like this is good, bad, okay. I'm just always okay. That's
well,
oh
Nasdaq
my
feels a
goodness.
little bit like maybe a buy, maybe it could be a buy soon. I mean, I wouldn't be overly leaning towards short side. But to me to me we can go like up or down from this level actually. I know some people would like to chase that, or maybe some people would be they were waiting for it in a sense that, if you are seeing market crash constantly, like you are imagining it in a sense that, okay, so I'm thinking everything is going bad and everything is getting even worse. So the stock market should actually come down, and maybe it would be also like a matter of justice happening, right? So if my view of what's happening with the economy is negative, I think that it should be fair if the stock market went down to sort of reflect that. And if it's going up, okay, that's probably manipulation, that's the stupid crowd, that's the market inefficiency, that's the pump, that's like people have been fooled by AI. And then finally, I'm getting, I don't know, Head and Shoulders maybe, although I showed it to our Head and Shoulders expert Derek Dargo just recently, and I was like, yeah, this is something for him. And he surprisingly he was like, no, I don't like this. It's not exactly Head and Shoulders because those shoulders are completely different scale, so to speak. So he wasn't happy with that Head and Shoulders. So we agreed that okay, so maybe it's a lower high just. And so if you want to see market going down, this is exactly what you wanted to see, right? This situation, but it might be a little bit premature. I feel that it could still surprise us on the upside. That is at least that is how I'm seeing it. But I I totally by your view that if they can't stop it here, if they keep selling that would be very concerning, right? That would be a clear signal that this time not that there are not so many bulls to stand against the dropping market, right? So probably it's very important to, if somebody wants to buy the dip, to first get really a sense of demand appearing, right, and stepping up,
Mhm.
because at the moment it doesn't feel like there is too much of demand. And let me welcome our viewers, Carl and Stefan, with us here in the chat. Thank you guys for
Yes.
being with us. Carl,
Thank you.
about political situation, maybe a little bit later we will find a moment. to address that, or maybe I will reply in the chat in a moment. So please be patient. Stefan says the panic may be also a positive sign. It's so low, we risk to lose the rally. How would that work?
Are you asking me?
Yeah, I mean, if you have an idea, like panic being positive sign.
Well, I think we mean like the rally today. Panic could definitely set in for sure underneath of yesterday's low. I think it's very important today. Like, if you're going to move, like we're talking about a rally. All we're looking at is a potential rally for 1 or 2 days. I'm not saying that the market is ever going to get back to the yearly highs or even back to where we were pre-Fed a couple of weeks ago. But the further you go down and the deeper you are into major levels of support, then the more likelihood you are for dead cat bounces. That's why they have that phrase that these things just come flying off the bottom. You saw that yesterday. That's the danger of getting, like, everybody has a danger. If greedy chasers to chase to the long side get caught in big sell-offs, and shorts that chase get ruined more than anyone. So if you shorted yesterday, you're chasing that thing down just in the snap of a finger in like 15 minutes. It popped 50 points. 50 points is like an entire day of S&P gains, and you got that in 15, 20 minutes. You got to be careful every direction that you're moving. But having said that, like we started earlier, the sign is this: the market finally showed after 6, 7 days or however long it's been since the Fed that there's a buy zone right there at the 43.30s. Like they finally came in there, 42.30s, excuse me, and really bought this market up. You got to hold that today. If this thing turns around and loses that today, what would be the reasoning for buying again? Like you're just going to get destroyed. That would be panic to me. If you get underneath of that, you're going to go down to the 200-day moving average or back to where we were at the earlier parts of the year. It's going to be a pretty quick trip, I would think. Yeah, like right there where you're drawing your line. I mean, yes, yes. Um, that's how I see it. You can definitely, but we're already kind of losing the rally before the market opens. If you have a 5-minute chart, you're kind of still making lower highs. Like the high was 43.25, 43.30. I think I mentioned on that rally yesterday. You haven't gotten above that yet. So I don't know. It's tough, but we're going to find out when the market opens. But still, you can't fall into the trap. What a lot of new traders do is they see that big rally and they start buying aggressively. That's probably why it was so big, because they're expecting that is the bottom. And that's understandable too, because newer traders that may have came into this game have done nothing this year but buy dips and score, right? We keep making fun of it, right, Marcin? But it's like you buy in the dip, you could just throw a dart behind your back, buy the dip, you're making money, buy the dip, you're making money. You do that for 8 months, you don't think there's another kind of market. Now you buy in the dip, you're like, this is ugly, this is terrible. So they're probably now waiting for every rally. And I would stay on that side, guys. I would not chase a rally at this point until you see a good solid close and this thing stops getting sold off. I would not touch a rally. You got to, yeah. We're going to find out though when the market opens.
Well, the
That's the
drop
way it goes.
is actually quite extended already. I mean, it's like 2 weeks of market just dropping. Is that already a sign of, I don't know, sign of bad times, sign of crisis? Is it that everybody stopped hoping and started looking realistically at the market and the economy? Um, I mean, this is what I'm thinking at least, and also what I'm thinking is that okay, we had so many days of the market dropping. Like, how much longer could it be dropping just like that without a correction, without a pullback? Maybe it's something that could happen today or tomorrow that the market unexpectedly spikes up. I mean, the index US 500.
Yeah. Well, I just think it's right now. I still overall feel the market will remain green for the year. I still think it's a strong market, but you know, it was really overbought. At one point, we were 23, 24% on the S&P. I think 40% almost on the Nasdaq. That that was way too high. So this is just to me a typical correction.